Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday. We started a week very, very quiet. Felt like August, almost, but not August during a correction, though. Sometimes we have that. It actually just felt as if you had a digestion day after a powerful three-day move where people weren't exactly sure which way we would go. So with that being said, we talked about levels that could potentially come into play for support, and then if we hold support, Friday's high for a bit of potential continuation, which at that point, up 4 days, hard to buy. But if you've been rolling up your shorts because you got in at SPX 1740 when everyone said the world was going to end, you know what? You have some complicated trading in front of you. That's what they call the pain trade. But at this point, I think most people might have covered into that with the oscillator down minus 75 and coming into the 150-day moving average. So at this point, I do feel as if many people in our community, took advantage of some of the long side and now trying to figure out if there are some individual names that are acting better that we could stay with and continue to trade for, cash flow or as a swing and not get sideswiped like we did, earlier to start the year. So let's just take a look at the SPX. You look at the, this overall chart. I want to put the 150-day moving average in. I don't know why it's not there. So I'll put it in. There you go, moving average. Look how much fun this is. Putting in the analytics, and there it is, the 150-day moving average. Combine that 150-day with the red dog reversal, and what do you get? A reversal. Something to cover some shorts, maybe look long. And then what happened? Oh, a little bit of a move above this 2-day pivot, which we did call about 1755, which also took you back above this, and then we actually showed a little power on Jobs Friday when it showed how many jobs or how little jobs there are out there. Market didn't care. And then today, inside day. So with that being said, you want to post up some Fibonacci retracements, and I know it's a little bit too early to see, the strength of this move off the lows, but we didn't even come in and test the 25% chance or the 0.38 or even a third, which would have been healthy. But again, Yellen speaks tomorrow. You have China news tonight. At this point, inside day with some movement. At this point, hopefully you took off some risk here. Maybe you navigated this okay and then figured out how oversold you were, or at least covered your shorts, let alone looked for a long. And there's been a few of them. So with that said, in the morning call, we've talked about some of the haves and have-nots, and during the corrective process, looking for the relative strength. And we've seen a lot of that. You see Netflix, to take a look here. This was your gap on earnings. Here was your continuation on Friday. Powerful, nice inside day today. Looks like that still looks good. GMCR, remember that news that it had? They sold it down, but then got a bid, and now we're right back here. So maybe tomorrow, if they don't take it away above 113, that can continue. For that, Tesla, just trying to show some of the, the ones that have been really moving. Look at that red dog reversal. Remember that? Imagine you bought that and you fell asleep for the last 2 weeks. You'd be owning this thing from about 138, and now it's a 196 and change. Looking like it wants to knock on the door of above 200. It did close at all-time highs above 194.50. Where are the valuation guys? Don't they know that charts trump valuations, especially when it comes to these type of names? Okay. Remember here when you had that whole big trend to follow? Well, it did get a little wishy-washy. Remember right around here, I think that's when many people started to trade it a little bit more short-term, and then here was your earnings. Then you actually had two red dog reversals. I might put this in my Schwab presentation. One, which wasn't really that blaring right there. Okay, and then you went up, continuation, then it kind of reversed there into that gap, so it wasn't ready, and then boom again, and now look where you are. Anyway, still looks good. We'll see if that gets over 200 in the next few sessions. Apple, very funny, right? News came out today, this morning, that Icahn was not going to pursue the buyback that he was looking for or whatever. So some people sold it real quick. I actually sold mine real quick because I'm like, oh my goodness, what's going to happen? Then I saw it hold 117, which was right here, okay, and got long a little bit when it cleared 522.93ish, and then you had a really nice move. I did sell into some of that strength, and I bought a little bit on the close just to have some. It still has some gap to fill, and it's acted pretty well today. It's protecting the gap. Remember we talked about, could Apple be different this time? Last time it gapped up, filled it. This time held for a day, filled it. Now it gapped up and continued. Something a little different. We on the 60-minute tried to show the the cup and handle pattern prior to that news. Where is it? And that was this pattern, okay, where you had the accumulation here coming across. Okay, you had this little red dog reversal right there. I wasn't in that day, but some people bought it. Good for you if you did. And then here was your cup and handle. There was your news, held the gap, and then now we have another little, flag type pattern. If we were to hold this, maybe it continues above this for, a little bit more action. We shall see. As far as some people asking me, what's going on with Google? Well, Google right now, had a nice move off this last pull-in and not enough power to get through the high. Still looks okay. Let it go sideways a little bit. Maybe it comes back. Amazon, I think, is more of a rally to be sold. You did have that small reversal here. Okay, it's still far away from this earnings gap. Today, a little bit of a doji. I guess see what happens if it opens up and trades below today's low. Maybe people are looking for something to short. We'll see. As far as social, okay, I don't think the market was feeling too social today. With that being said, Facebook was just quiet all day. Everyone in the virtual trade floor, like, Red Dog, you buying back Facebook that you sold on Friday? I'm like, I'm going to wait. Sometimes they don't give you another chance, as this stock has just been really strong ever since this huge gap here, or when it cleared this descending channel here after this nice little red dog reversal right there. Anyway, this was your last gap. Here was a nice move on Friday. Inside day today. So, if you were looking that you had to be in Facebook, maybe you bought some. For me, I didn't see much of a signal, so I'm just going to wait. Twitter tried to be green, didn't have enough power. This also, just an inside day on the weak side. You still have this gap here that's developing a big hole. We'll see if we get a trade into there or not. It's still above the pivot from when it reported, so it just needs some time in here. There's not much to do. Maybe micro traded, use your 3, 5 minute, 15-minute chart at this point. If this gap were to stick and it were to start heading back down here, then perhaps we get that move to the 44 to 46 area. At this point, nobody knows except for you have an inside day today. LinkedIn also, inside day to the down. Lethargic, out of play. I don't think there's not much to do here. See how it handles this 200-day moving average. If it starts trading below and stays below, you'll know that there will be, or should be, there should be more weakness perhaps, because stocks that get below their 200-day and hover below it for a few sessions, 2 or 3, typically that's a little bit of a clue that there's more weakness. YELP had really exciting news, but what does the market do? It typically sells excitement, and that's what it did here. You had this earnings gap that looked really good in inside day on Friday, gapped up and was sold. That means it needs time. Maybe it does what GMCR does and just negates it tomorrow and comes back up and builds. But at this point, this to me is an ugly candle, meaning that it's extended and it probably needs more time. So hopefully, if you were long coming in today, you sold some, and you look on the 3-minute chart to see what you could have seen here. Gapped up, boom, sold right away. And then really right here was your clue that this gap could get filled, and that's what it wound up doing for the whole session below. Usually this would not happen if it was going to stay that strong, so see what's next there. Gold still hanging around. Gap up, didn't do much for the day, but did hold above 122.5. Tomorrow with Yellen speaking, maybe she comes out with something that will help stimulate this market. They have 124 there. Talked about this, this downtrend that we started to break above, last week, and now will this act different? For this to act different, it should hold this gap and not really stick around for that long and continue. I guess tomorrow we'll see what happens. I did buy some calls on Friday and talked about it. I sold, I think, 25% just to book something, and I'm trying to keep the rest. I have weeklies for Friday. We'll see if we get a good trade there. I didn't really trust this move. That's why I went with options versus stock, and we'll see what happens next. The GDX miners did have a pretty clean breakout, so sometimes it follows that. That was a better place to be. Let's look what silver did. Silver, not much. Opened up and closed down, but silver's been pretty monotonous, or whatever that word is in here. Random, erratic, and not great, but above this level, maybe it gets better. Maybe we'll see what happens. Anyway, let's move on. This soda is interesting. Okay, I know Mark was looking at it, and this has come all the way down from the 75 area. A lot of attention on this after the GMCR, what's it called, stake by Coca-Cola. All I know is that you did have a quick move up. It closed near the highs, pretty strong. You have a gap right here, and to me, if I was short, I'd be a bit scared. So with that being said, perhaps you get a trade into this gap, 40.90, and then this is 41.62. I am long, small, traded it here and there today and took some with me. So we'll see if we get that continuation trade. If it opened flat and it trades through here, perhaps it's a good add. If it opens up, that's why I wanted to have a little bit just in case, so we shall see. Zynga in social media land, still acting okay, just not ready to be prime time, I guess. As long as it stays above this area, I think it's okay. You had a gap up here, couldn't go. You had two down day, you had a down day, and then it held. Maybe today's little failure puts it back in the base. I'd love to see this hold 460 and continue. You have a big time monthly chart here. That doesn't look so good. The weekly chart that at some point feels as if it could trade higher, perhaps towards $6. We shall see. And that's really it. Today was Monday, and last week you had the volatility. Today it constricted. I do think there's a lot of people caught short. I also think there's some people that might have missed last week that are feeling a little trigger happy that they need to get in. Hopefully, if you didn't catch the Red Dog reversal, there was some decent trades to get on Thursday, and then even some time. I know if you were watching the virtual trading floor Friday, you saw into that down open. I did try and buy some spiders and navigate it, and you didn't have to have risk on into the jobs number, but you could have gone from red to green in some things. And then today there was a little range type trading with some relative strength and weakness across the board to navigate. And we'll see what happens tomorrow. We'll see if that was the correction or if we need to pack and fill a little bit, which would be better. But again, the market's not going to do what we want it to do. It's going to do what it does, and we just have to navigate it and make sure that we have our keyboard in front of us, and we don't overtrade, and we don't get happy fingers, and we don't get too frustrated, because when there's clarity, money does perhaps come a little easier than when things aren't as cut and dry. Not saying everything's ever cut and dry, because it isn't. It just sometimes things have higher probabilities of working out, and you could potentially look for more. I don't know, I'm just jabbering right now. With that said, I guess it's been a long Monday. It's probably snowing again tonight in the Northeast. It snows every day, it feels like. So if you're getting a little depressed with the dreary winter and you're on the Northeast, just bear with it. Hopefully, better weather ahead, and get outside, go for a cold weather run. It does help. And that's it. See you tomorrow at the morning call. Have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.